we look for an impulse move. So we have an impulse move right here that happened. We then mark an order block right there. We wait for the market to come back and we take our trade right there. Let's just say this is an M15 chart. Now, what do we want to do? Let's just say the market tapped in there. We're looking for an entry. We go to our M5. We then go back. And then what do you see? We then have consecutive candles coming into the zone. And then when the market closed below those consecutive 2 candles, that's a CSD. Therefore, you can just enter right there or wait for the market to pull back below that CSD candle. Then you enter. And then we have an engulfing one. Also here, entry, where the last candle over there, when the market closed below it, it's opening. Therefore, you were opening your entries right there. You are targeting these lows. That's your scalp. And then let's just go to a 2 minutes chart and go back to the very same area and see how you would have entered that. Same criteria. You have the market taps in there, gives us an engulfing candle on a 2 minutes chart. Therefore, our entries are coming inside here because we have tapped into our zone. We then take our entries, stop losses, they come above here. And then we target our lows. This is our first low that we will be targeting. And the market comes there, or you'll be targeting those lows somewhere between here. Then you'll find your target, and that's it. Let's just look into M1. So in M1, we are looking for the very same criteria. The market taps into the market. You have an engulfing candle. We close below that. You could have taken entries here. Stop loss goes above. Right here, you have a market structure shift. You have a high that is made. We pull back. We then violate that. We come and close. Below that, you have a market structure shift. And then you can take your trades. After the market closed there, you have a fair value gap right there. You have an order block here, CSD. You have taken your entries in this area or immediately after the market closed. So you have a CSD entry. You have a market structure shift entry. Also, you have a, what do you call this? An engulfing entry. When the market closes here, our entries, stop loss goes above there. We're targeting these lows and we are done. So that's how we get that. So let's just continue with the zones now that you've seen how that works. Now we have a market going out here, but it is not aggressive. It is just moving however. But then look at this, man. The market drops here aggressively. So as the market drops aggressively from that area, we could have simply marked that, right? And say this area is an area where we want to look for opportunities.